right? Money making is mostly based on a habit more than a timing. So in a recession, if you have a habit set up where every month you invest $100 or $1,000 into the market, in a recession, those $100 are going to actually become more valuable in the future because the market's tanking. So that's where your habit, your discipline actually increases in value, not your stock picking. In a recession, though, people get very scared. They start to safeguard. They start to see, oh, the entire market's going down. It's a crash. So they don't invest into it. That's when the emotion starts breaking the habit. And this is where start psychology is a very important factor um, in the investment cycle. Because a lot of people say in a recession, I need to pick something that's recession proof. I need to pick something that coming out of recession is really good. And there are a few industries coming out of recessions that are really good, such as staple industries, because everyone needs food, for example. They're one of those few recession proof industries. But as I kind of to go back to the nut crux of it, the habit, I think, is what makes you the money most of all, not the time periods. So if we, again, look at the charts in a dollar cost average, COVID was about 6 years ago. So I'm going to pull up a 10-year chart and we're going to see what COVID looked like. So again, we're going to choose the S&P because, index funds are really easy to do numbers with versus specific stocks. So this is a 10-year chart of the S&P, very, very, very standard. COVID happened basically 7 years ago. So 7 years ago is right around there. And the entire market kind of dips down, right? 3,300 before COVID happens and it jumps down to 2,400. So that's almost a 30, about a 25% dip, give or take right there. It's a huge dip, right? The COVID goes into a giant recorrection. So again, if my habit is in place, I see this as a giant discount point. Oh, my dollar cost average, my habit, my system is buying constantly, but right there, it actually gets to buy it for cheaper. And this is where holding cash for recession times becomes really important. It's what Warren Buffett likes to do. He holds his money for when the markets go down and things become more valuable in his equation. And that typically happens when the entire economy is crashing, because that's when companies become very valuable. So this right here is where the habit, the psychology is the value versus the stock itself. Yes, some industries, as I said, can be better than others, but the habit is what makes you the money. I hope that answers your question as it is.
Yeah, that answers my second question as well. So thank you.
Yep, no problem. Any other questions in the immediate? Okay, perfect. With that being said, I would go on to a couple stocks because I said I'd give a few stock recommendations. And the first ones I kind of would say is at this point, the stocks I recommend, the ones that at least I'll be talking about today, I've been in for the past 6 years, I think. If not more, I'd have to check my dates, but it's about 6 years. So all these things, I kind of bought in during COVID, just before COVID, roughly around that time. Actually, a few of my dates were 2019, so it was about 8 years, as I say them. So these investments are long-term investments. They're things that have been pressing consistently over that time. And again, these are things that are actually not going to be that probably shocking to a lot of you because most of my investments come from what we do in the real world, right? I go into the real world, I look in the real world, I ask myself, what are things we use all the time? And for all of us, when technology came around, even for the past 15, 17 years, people would say, when you have a question, they'd be like, go Google it, go Google it, right? It was a phrase we literally say, go Google something. It's probably one of the world's most easiest common phrases to tell someone. And when that phrase came out, I invested in the company that everyone told you to go do something with. Because it was one of those things that everyone told you to use this company, and this company was literally taking over the world. Gmail is something that billions of people use. So it's something I invested in a very long time ago. So Google is something I just done. And if you pay attention to the news in the past year, Warren Buffett also recently just put a ton of money into Google through Berkshire Hathaway, right? So this is a company that even one of the world's richest investors is saying has a giant future. And it's just something I thought about coming from what do we use every day? Um, I would guess in this conversation, probably a solid 50% of you are using an iPhone or an Apple device to use it. I've been invested in Apple since like 2015, I think. Since I saw it trending as people were buying iPhones, the iPad was coming out. I told myself, what is something that's going to be in the world in the future? And again, Apple isn't a crazy company. And it's one of those world's best companies. I think it's actually the world's most valuable company right now. Um, but that's just noticing stuff. In regards to tech, because everyone's in AI, and I saw a ton of stuff about AI, I'm a very big believer in the California Gold Rush system. So as a lot of people were sharing companies, especially AI companies, bleeding and dying, especially the next couple of years, it's because it's probably very true. As a Californian, the California Gold Rush was a huge thing. Thousands of people, hundreds of thousands of people were coming to find gold in California, starting businesses to find gold in California. Very few of them were successful, but the people who did get rich were the people who were selling them picks, shovels, machinery. These companies made thousands of dollars off of the people trying to make millions of dollars, right? But very few people made the millions, and the ones selling the equipment definitely made the millions. So a lot of my AI-based investments are all based about the idea of who is selling the items to the people trying to make the big money, right? Not which company is going to be the next big crazy company, but who is selling something to all the companies. So I think my number one AI recommendation is, or a company that I'm invested in is not going to be a surprise. It's NVIDIA. It is the world's biggest chip maker. It is the world's most dominant chip maker. They have a backlog of orders. And it's one of those things that, again, if we talk about longevity, the question I would pose to most of you guys is, do you think NVIDIA in the next 3 to 5 years is going to get bigger, smaller, or stay the same? Will its value go up, go down, or decrease? Sorry, go up, go down, or stay the same? And in my mind, and I think in most people's minds, that company is going to do one thing and one thing only, go up. So if I know the future is about making money, I know that company from today, if I have a 5 year mentality, I know that if I own that company today and it's in 5 years, I'm going to be more profitable. I don't think anyone would disagree with that fact. It may have a smaller market share, it may have a lesser market share, it may have a different market share, right? It might even not be producing the same product, but that thing is probably going to be a monster in the future or the near future. So this is how I look at a lot of my AI companies is which ones are pieces or mandatory pieces that everyone requires. So in the current cycle that I'm actually looking into, energy is the big one. For the past few years, I've been deep diving into energy. Um, so with this, I'm actually going to show you guys a fun little comparison on energy because this is how I currently do my stocks in a more aggressive market. Um, all right, sorry. NEE, Next Era Energy, is a kind of a popular stock right now, especially in dividend industry. Um, so, energy, as I kind of said, is a new cyclical thing, as I think is coming in the AI cycle. So we're looking at a bit more short term here. So I'm going to start in a 5 year kind of picture. In a 5 year picture, Next Era Energy looks kind of growthy, but it's going a little bit across the place. 10 year does have some growth. So we see energy is coming into a picture. It's becoming more and more important. But this company, it's a little more cyclical. So for you guys like day trading, this one's a bit more active on a day trade style. Okay. So this was one I was actually invested in. Um, I use the word was here because for my personal style, it wasn't showing what I wanted, which was a more progressive growth. So the other one I had bet on at the time was GEV. And GEV, again, looking at the same picture in the 2 year cycle, has increased almost 600% compared to NEE's, I think 15 or 16% it was. So this again is telling me that energy is a huge thing that's booming. And again, the PE is quite still low for the timeline. So 5 year, again, it's not even been around that long, but these things are giant growing companies. So I've used energy as my next big thing because as data centers be built, all of them are making contracts with energy companies or producing their own energy um, as kind of the next turnaround. Again, because I'm looking at what are things that these companies need to have. You can't run AI without having power. So what companies are producing power to these companies who are getting the giant power contracts for these companies, right? I don't need to figure out which company is going to be the next big one because only a few of them can power them. And that's what I'm looking at, right? It's what we call a pick and shovel mentality for investment. So not trying to be the next big company, but realizing that all of them are buying from the same products and from the same bases, and those are the places to make stable money. So those are actually a few of my actual companies and a few of them I got out of, and my main mentality. Are there any kind of other questions for now?
How to handle the emotions during buying the stock or index fund?
Yep, that's a great question. Emotions, the emotions of money is a really fun thing to experience. I'll say it that way. They're quite up and down. So the first thing I would at least say is, um, you never put money in the stock market you need right away. The stock market is like gambling. It's a little bit like gambling. You don't go to the casino with money you need for rent, right? You don't gamble away your rent money. You can gamble away money you have on the sides for fun, which is what the investments are for. But again, stock market and index funds are, let's just say, mathematically unstoppable, right? Their history shows an unprecedented ability to continue to grow. So in this, the big psychology is just being able to know that that money, whatever it is, I don't need it, number one. So we've psychologically set up a barrier to say that there's no emergency happening. And then number two is knowing that that money is not a day-to-day money, it's a long-term money. Because again, if we look at the index funds, like I showed you, I wouldn't want to check that every day. But if I check that in 2 years, if I check that in 3 years, check that in 5 years, check that in 10 years, it looks really beautiful. But the day to day looks quite red. In fact, the entire month, the last month was entirely red. That would make me feel bad. So it's separating my money's purpose in my mind. I have money set for real life and I have money set for investments. And in today's world, we talk about 15% is the kind of golden standard for paychecks or numbers to be had. So you spend about 15% of your paycheck, every paycheck, into an investment. And we call it actually say you pay yourself, right? You put your money in a place where you're paying yourself in the future. And then if you can't do 15%, you do X percent. You can't even do even percent, you do a dollar. But it's anything you possibly can to start separating and building that habit. Does that answer your question?
Yes, it really answered my question. Thank you.
No problem. Anything else? Anything else?
Hey Nick, what about the retail or the consumer space stocks?
Nick, I have one question. Sorry, I'm on the phone, so I didn't know if I'm cutting over somebody. Do you look at those pick and shovels companies more like the well-established companies? You know, you mentioned about the power. Those companies like UEC and PG&G, not PG&E, the bigger established companies. Do you look at them or something like boutique things that are coming up as startup with some kind of crazy idea, which may turn out to be 100x, whatever, right? What's your thought process?
It's a bit of both, to be honest. So let's just go with this. The PG&E style, a lot of companies like this, these really old established ones, are usually dividend machines. They're usually paying a dividend between 3 and 6%. So they're growing slower and they're taking less growth to pay out their customers. So they're looking to stay established and just keep their customer base happy and keep their shareholders happy. So I use them a lot for kind of dividend concepts. So I'm still in the energy sector, but I'm taking money in a different way. The ones I shared because I was looking for growth, which is why I cut NEE from my personal profile because I was looking for growth-based energy, things that were continuously growing in the sector versus things that were kind of already trying to stabilize. So I wanted something that was paying a lower dividend and focusing more on growth. Um, so it's really there's companies doing both right now. It's what people want. If I was a bit older and I didn't care about the growth as much, but I knew energy was important, maybe more dividend based. If I was younger, like I am, and I'm just gambling on it because I think energy is going to be the next big thing, right? I'm taking a gamble, so I'm throwing money into companies that are a bit more risk taking. So it's really, again, to answer it, it's more based on my emotional settings on how I'm approaching the money and how you'd be approaching the money.
Thank you, Nick.
Mm-hmm.
Hey Nick, this is Shashank. I have like two questions for you as well.
Mhm.
One is like after you pick up a company, okay, this is a good company. I feel good about it. I'm gonna invest in it. What tools do you use to research that company? Like, what are the things that you look for? And second, like, have you ever looked into the private market, like like investing in Anthropic right now or SpaceX before it became public?
Uh, I'll do the second question first. No, I just generally haven't. Um, Mostly because I don't have access to those things very easily. So I don't really get interested. Also, in my experience, IPOs today are mostly hype based. SpaceX is a great example. That company got a ton of hype, and its stock is taking a giant nosedive as soon as people could sell out of it. So IPOs are hit or miss in today's world, I think.
That's true, yeah.
Can you repeat your first question for me? Sorry, I
Sure.
apologize.
So yeah, of course. So after you pick up a stock, like this is the one, this is the company that you want to invest
Mhm.
in. What are the parameters and how do you research it? Like what homework do you do before investing in that company?
Yeah. So mostly I do what I call common sense test, at least at this point. And the common sense focus on a few things. And the first one being is how much of a moat the company has. And financials and business, we're talking about a moat is how much distance they have between their competitors. I want to use a kind of a great example. Costco is a great consumer company, consumer business. Costco has it's warehouse food, like a lot of foods are, but it's exclusive. It's membership based. There are fewer membership based things, like Sam's Club is one of them. But one thing it also does is it provides food, it provides services for people. So I think Costco is one of those things where it's really great and provides certain unique things. And I think as like commercial industries, it has kind of a nice moat against its competitors, especially on loyalty. In regards to things like other companies, I would look, for example, leadership is another factor that's important. I typically like companies that have strong leaders or strong leader personalities. Apple would be one of those things I liked when Steve Jobs was leading the company. I liked Tim Cook's direction. So I think vision is really important, making sure like the leaders have a right goal in mind. But most of all, it's mostly how they're operating their money. Right. So a great company isn't going to be one that's creating a great product. It's one that's balancing their paychecks, they're balancing their balance book properly. Because
So
business isn't about selling products. If you sell a million products but you lose money on every single product, you're not a great business, right?
yeah, that makes sense. So right now, like if you're investing, like you talked about those companies like Apple and Google.
Mhm.
So like leadership is changing in Apple. Like Tim Cook is retiring, and other
Yeah.
person is gonna come in. And right now, like the PE ratio for Apple is like around 34, 35 compared
Mhm.
to Google. Like its PE ratio is 28, 29.
Mhm.
So like right now, if somebody's investing in the stocks, like it makes sense. Dollar cost averaging like DCA.
Mhm.
So even though you've been spending for last like 10 years, but right now we are still investing some money. So you
Mhm.
pick stock like, hey, this stock I need to spend more money, invest more money compared to the other. So right now, like would your theme would change, like given like Google is like 28, 29 versus Apple is 35, or would you be still investing in both the companies like equally at this point?
Okay. I like this kind of a metaphor, this analogy. So let's just do the Apple Google kind of comparison. If I had to pick money today, right here, right now, I would probably put money in Google more than Apple right here, right now. If I had the ability to do both, I would definitely do both. Apple's a company that's got an ecosystem that's growing, it's stable, it's locked in. Its customers are pretty much once it's very much today. You're either an Apple user or you're not. And it's one of those things that people start converting more and more to Apple over time. Android takes a bunch of everything, but Apple is just growing bigger. So there's no doubt in my mind that will continue that way. Um, but if we're talking about again today, because you gave numbers from today, it would definitely be Google because I see Google having a bigger impact in the near future and the long future, much more than Apple would be. And when we talk about the AI race, Google has its own AI. And the nice thing about Google's AI, unfortunately for everyone else, is Google owns the Android AI OI system. So every Android device has Gemini infected into it, whether they like it or not.
Plus, it's
Right?
coming to Siri too. So
Yeah.
it's
And
covered Apple too.
it's coming to, exactly. So it's one of those things where, I've noticed that as a company, Google is expanding its powers. And I got a strange kind of hint in my own mind that in the next few years, we will definitely see Google's AI do many more crazy things as it develops more and more. I use Excel a lot. And for the first time, my Gemini was like, can I fix that? Can I fix that spreadsheet column for you? Like, we don't see your equation working the way you want. We'll fix it for you.
Perfect.
And it asked me in the middle of my spreadsheet, and I was like, oh, this is going to change the world.
Okay. Thank you, Nick. That makes sense. Thank you.
Yep.
Nick, this is Gary. I have a question.
Mhm.
So, predicting and analyzing the company, we are good sometimes. Even I'm good at. While selling, right?
Mhm.
When you choose to sell, that is a big problem, right? Some people just leave it as it is. Some people sell it and then they swing it. The biggest problem, people in the group also they will ask me when to sell it. Okay, selling is the I think most critical part in stocks, right? So
Yeah.
that's where the emotion starts. Okay, well, after you sell it, suddenly it peaks. Everybody say, "Hey, what? Why did I sell it this?" So yeah, can you share some experience on that?
Yeah, I could go through my mistakes of selling for a long time. I'll say that. Selling is a thing that causes regrets, causes problems. I think the best answer to this is to know what you're selling and the purpose of your selling, because purpose does a lot of things. When I was younger, I would actually sell stocks just to sell sell stocks just to sell stocks because I didn't like it or didn't think about it, and I wasn't, it was emotional. It was impulsing. Um, So that is something I very much recommend against. If you put money into a stock, you put money into the market, unless you have a true reason to pull it out, you just don't, right? If you say, I don't, Google Apple kind of comparison is a good one right now. If you believe that both these companies have a future, but maybe you say their future is weaker, and I think Nvidia has the best future, you don't, I wouldn't ever recommend selling out of Apple and Google if you still think they have a future. You just don't put money into them. Let me do that real fast. So, in this regards, right, I didn't choose to sell two companies to put them into a third. I chose to stop putting money into them and let them go by themselves. And I think that's really important when it comes to selling, because a lot of times with investments grow a lot over time. So if you think another investment is better in the current time, a really important question then to ask is, well, is that investment number one just dead, or is investment number two just stronger currently? Right? Because moving money out of investment number one triggers taxes. And I'm speaking as a US person right now because I don't know where everyone is and tax laws change. But every stock sold triggers taxes. And that becomes how you really need to balance it is not when I sell as much as when this sells is what is it going to do to my life? You know, is the purpose for me to feel better or is the purpose for me to buy a house? Right? I'm willing to pay taxes to buy a house. I'm less willing to pay taxes to feel better. And it's one of those things. And this is where index funds get really nice and really useful because you can just kind of invest into them and constantly do that. And then when you need something, it's again broad, it's always grown, it's always grown, and you take it when you have a purpose. If you're the type of person who needs money now and you want more consistent flow money, this is actually where I think dividends are a better source of income, and dividend stocks and dividend style stocks are better investments. because the psychology of money is the best part of this kind of question, is what is the purpose of the money? When do you need the money? Why do you need the money? And what we're using to create the money, right? If I know that I need $1,000 every month, I could use dividend stocks to produce $1,000 every month that will continue to grow, and I need to sell nothing. The dividends pay me like a paycheck. If I don't need that money and I'm doing growth-based stocks, and I say, hey, I'm investing this money and I want to use it to buy a house. And let's say you find your house and your house, takes a $100,000 down payment, and those stocks have grown to that point. You sell it, you pay the taxes, and it's done its purpose. So it's really about the emotional purpose of, I think, what you're selling, because the most important thing is when you sell is the tax part of it. And this is where day trading is the part I don't focus as much, because following taxes on day trading is really annoying to me. Right. But it's much better for me to follow taxes on a single sell. Oh, this is a long-term capital gain tax. I made X amount of dollars. Principal was Y amount of dollars. Right. My taxes based on Z. Really simple numbers. For my dividends, I know as long as my income stays, around certain numbers, my dividends go into certain tax buckets. So it's more purpose. That's why I don't like to day trade, because it messes with my taxes too much. Right. But if I know I'm investing for long-term growth, I know I'm investing for longevity, I know I'm investing for, some random event, some trip in the future. Let's say I want to go and take, an African safari. Right. So, those NVIDIA stocks, right? I'm paying a little bit of tax on them, but the purpose is for me to go to Africa. So it's really mostly based on that, and taxes being the major factor of the decision. I don't know if that answers the question the way you thought it was going to be, but taxes are my answer. Don't sell because taxes suck.
Yeah, yeah. Short term, I think what people who are good at in options, there. I think, for example, in our group, she is the best. I mean, he is make average 3 to 4 or 500K easily. That he knows that how to. He was doing that. He's very good at option. 90% he predicts well, and then he is doing it. Some people who was very known and well known people, we can do that. So they were continuously doing it. So we don't restrict. But since people are expert, they are okay with that.
Yeah.
Because they are very expert, they are doing it. People who don't know long term investment, they're doing it. So we also predict the stocks, Nick. For example, last year we written 2026, and we written in a Excel sheet what is the purchase price and how much is gonna go. So pretty much we see it's going at least above 50% to 100%. So every year. So we can share that as well. I mean, if you have something, we can collaborate, and then you can see look around that stocks. We can predict that. So my aim is for 2030. That's where we were adding some stocks. So see how for long term how it works. So that's where one long term strategy, and the short term strategy. People with the 20% or they have profit or something, they can play around short term strategy. That's our strategy. Mhm.
Yeah, if you know how to day trade, I recommend it. If you don't know how to day trade, it's one of those things that
Yeah. We recommend people who expect they do follow it and they do day trade in our group. So
yeah.
people who don't have experience, I think they can work on with a long term perspective. Yes, yeah.
Yeah, because especially with just investing in general, the psychology is most important. The day traders I've seen chatting in the group have a great psychology towards the money, have a great psychology to their bets. They're very disciplined about it,
Yes,
and
very
that's
different.
really important. If you're a new investor and you
Yeah,
don't have those emotional walls built in,
excellent.
the index funds long-term styles are
That's the
much
reason
easier.
recommend people not to invest, because until you don't know, you just don't do that. Even that's another good strategy, right? If you don't know about the company, you don't know how they make profit, don't invest, right? Another good.
Exactly.
Yes, right. So yeah.
If you can't explain how a company works, don't spend money on it.
Yeah. Yeah, please go ahead. I mean, anyone have any questions? Yeah, you can.
Yeah. I actually have work in about 10 minutes. That's why if you guys have any last questions, it'd not be the right time to ask.
Good.
Perfect.
No one has to. Yeah, go ahead. Whatever you can share it then. Yeah.
I guess since we're sharing, one thing I think I really would want to share, especially for the younger people,
Mhm.
when it comes to investors, I think it's really important to have mentors. I'll say it that way. And at least for me, a lot of people talk about the name Warren Buffett, but Warren Buffett is actually not my, role model slash mentor. His partner. So if you know the name Charlie Munger, Charlie Munger is a very good name for young investors to know. He is
Oh.
the second half of Berkshire Hathaway. So he was the other co-chairman for another 50 years with Warren Buffett, but he's not really publicly known. He's written one book, as far as I know. It's not even written by him. It's kind of put together by his family.
Mhm.
But for young investors, this would be the person I kind of recommend you follow is Charlie Munger again. He's really changed my principle of investing. I know he changed Warren Buffett's life, but he's not very well known. But in regards to the, let's say, in the investing world, I'm very principled. And a lot of stuff I talked about, such as the common sense idea, looking at a company and seeing its common sense, seeing about what its ability to survive the world and such, really comes from him.
Fantastic. And please share this book actually, so that'll be really helpful.
Yeah, actually, I have it. I have a copy of it. I can send it to the chat.
Yeah, nice. Thank you. Mhm.
I think that's the last thing I want to share. So unless there's no other questions, I would have to start prepping for my other work.
Yeah, hi, Nick. Just a couple of
Mhm.
questions. Thank you for doing this.
Mhm.
So I think somebody asked this earlier also. Can you share the tools you use for your analysis, and like what is the threshold you have for yourself when you decide like now I would invest in this stock?
Yeah, so the tool I use are actually quite basic. So in regards to finding companies, I use very simple Twitter, Reddit, and just, comment what people tell me about to find companies. In regards to how to analyze them, most of the financial knowledge is public knowledge. So you just look up the company information about their balance and budget sheets, especially since they're all publicly traded companies. So I look up that part myself to look up the balance sides. In regards to the other stuff, it's really just TradingView or Yahoo, as you saw, because a lot of my stuff doesn't require the technical aspect of trading, right? I don't need a tool, an analytical tool as much because I'm not looking for a perfect opening position. I'm looking to
I
find a
see.
company that's good value, that's got a future and the ability to have a future, and that's what I'm investing in.
So before going to a company, you first decide on a sector which you think has a potential better future, and then
Hmm.
you look into the companies in that sector, and
Yep,
then you
exactly.
decide on. Okay, I see.
And actually, if I could say one thing on top of this, as you kind of said, sorry, I didn't mean to interrupt you. One way I do start this is I look at the ETFs in any sector. So
Mm-hmm.
if I was looking at the tech sector, I look at the ETFs, the popular ETFs in the sector, and a lot of the ETFs have the same companies at the top.
I
And that's
see.
actually where I start. So if you notice, a lot of tech ETFs right now have NVIDIA as the number one
Right.
position in all the ETFs. So I was like, well, why do I need an ETF if everyone has NVIDIA? So I
I
look at that
see.
company myself. I did this a lot for a lot of ETFs, and that's kind of how I built my own. So I looked into tech sectors, energy sectors, biotech sectors, health sectors, and I found companies in each one that were dominant, strong, and I thought of, future longevities.
Got it. Got it. And one last question. So, if for
Mhm.
somebody who is just starting out, like I'm starting my investment journey,
Mhm.
so if you would recommend one ETF for like invest and forget kind of thing, so which
Yep.
one would it be?
Yeah, it'd be VOO. Actually,
Okay.
I'll give you two choices. Do you want to make dividends? So do you want to have like a monthly paycheck, or you want to have growth?
Growth.
Yeah, then VOO.
Okay. Yeah. I think yeah,
So
that's the consensus.
yeah. Well, people want money for different things, and this is the really important question.
So, if it was for dividend, then which one would it be?
If it was dividends and you said I needed, so actually to be very fair with dividends, I'd be like, how much money do you have and how much money do you want? Right. And if it's
Mm-hmm.
say you say because dividends have percentages on them,
Mm-hmm.
right? And because you're just growing and you just want to build a machine, I
Right.
would say, the Schwab
I see.
the Schwab
CHD.
one, because again, it's an ETF style, which means that you're going to know it's going to continuously grow and you know it's going to have growth over time. The dividends are going to continuously grow over time. So if you're new, you're young, and you say it can grow, but I want it to still be a monthly paycheck, it's going to do it a different way. It'll grow a little bit less, but it's trading you because it's paying you a monthly paycheck. Does that make sense?
Yeah, it does.
VOO doesn't pay you that monthly paycheck, so you have to live your life knowing you don't get that support, right? You
Mm,
choose when you want that support. The psychology is separated.
I see. That's
Okay.
something you just lock in and forget.
Yeah. So it really depends on what you want. If it's really 100% growth, VO, lock and forget it, give it a year, and then you'll be up a free 20% a year. And free 20% probably.
Okay, yeah, that makes sense.
So is the Schwab
Thank you.
the SCHD?
Sorry, what was that question?
Was the Schwab ETF the SCHD?
Yeah. SCHD, yeah, that's Schwab ETF. I think it's
Yep.
currently like $31. It has a clear history of paying increased dividends every year. It is probably like one of the dividend kings of dividend kings. It is a lower percentage. I think it pays like 3.2. So there is hits there. Again, if you were looking for strong dividend companies, if you look into that dividend ETF and look at the top ones inside of that, you'll find strong dividend companies. It's a bit more risky because it's one company and not an ETF. But if you're looking for a bit higher percentage, you could do it that way. Like I talked to him, mentioned how I find my companies. I open the ETFs, I look at which ones are the highest ones, and I pick and choose from there a lot of times.
Okay. In summary, what I heard from you is like to grow the wealth, you would continuously invest, either do a DCA or invest in new companies that you find lucrative, I would say, but you would not sell unless you want the money now. That's the
Yes.
summary of your investment, correct?
Yeah, if I want to, I'm gonna narrow you down to the first one. The second one is good, has risk. The first one is more foolproof.
Right. I mean,
And
if
I
only
think
you need money, you take it out, otherwise you don't.
exactly. DCA is the habit of putting money to the side that you want in the future for whenever.
Okay.
And when we talk about wealth building, that is the one. That one, the picking the right company, that's luck, right? Me having Nvidia explode, that was luck. That was not skill at all. That was luck. Me having money in VOO for the past 10 years, that's
Yeah.
skill.
Okay.
Does that make sense?
Yeah.
And that one
Okay.
made me a ton more money than the first one did.
Right.
Nick, you might have AMD in your portfolio, right? See, even I have. So I've seen a good amount of returns is
Uh,
there. Are you going to sell it or are you going to keep it?
Well, I don't have AMD anymore. I got out of it. I had it.
You had AMD
I
and you get off it? Okay, my
well,
God.
well, I had AMD and Nvidia from a long time ago. I sold my AMD for a purpose.
Oh, okay.
Right. I didn't sell my Nvidia, and that was just again that was luck. Right.
So when
I
did you
just
purchase? I mean, if you don't mind, when the entry price for you, when did you entry?
yeah. So my entry price for Nvidia and AMD were both under $10.
Man, you're
Right.
awesome.
Right. So again, that's luck. I was a professional video gamer, and I knew these companies were important for video gaming. I had no idea it was going to become so important to AI. Pure luck.
Mhm.
Right. So a lot of people say, "Oh, I'm so skillful." I was like, that's not skill. Right. The skill part was having the investments and keeping them there and not selling them for not emotional reasons. Right. Because when they start spiking earlier and such like that,
Yeah,
that
the
was
one thing, as you said, you can see the everyday usage because when you start using it, you pick up that public company. That's what you say, right? So
exactly. Right. So if you don't know, if you say, "Oh, I don't really have a use for this money and it's just here there to grow," put in an index fund. Right. Because if you're not sure its purpose is to grow. And that's kind of thing. Oh, this money's purpose now is to buy a house. Before that, before you know you want a house, its purpose is to grow. So it's very purposeful actions.
Hey Nick, one more thing before
Mhm.
we let you go. So, do you follow like any podcast, YouTube channels, or like Reddit forums, like where you get some ideas from, like
Yeah.
which could be a good stock?
Yeah. So I do let's say all of them, I think, as you said them. So Reddit, I follow okay, Reddit if I can do it really quickly. Reddit, I follow you value investing, stocks, uh personal finance, Bogglehead, um a few other those are the big kind of finance ones. Financial independence. I'm just kind of scrolling to my feed right now as I'm trying to find investing. These are all Reddits I'm in. Value investing, and I use a lot of them to give me noise to find signals, and then from these signals I'll find my own companies. This is where I will openly admit I was slow to get on the semiconductors like Micron and the business stuff. I saw them getting the right signals. I just didn't jump on them. And at this point, I'm not going to because they're too out of control. But this is where I found those companies. So that's Reddit. In regards to podcasts, there's actually one I really recommend that helped me start. Finding it's on Spotify. You can find it pretty much anywhere. Let me just find the name for you before I have to go. It's called the Investors Podcast. And if you just start the first 10 episodes, first 12, 15 episodes, I think the first 15 or so really helped me set a baseline. They go through Bill Graham's The Intelligent Investor, which is a great book about investing, but they help kind of give some basic fundamentals and they help set psychology. And I think that's the most important thing, especially for the more seasoned people, especially the day traders, right? Investing is more psychology based than anything else. It's discipline of yourself versus anything else. Have rules, have procedures, have cell numbers, things like that. But that's what I use to gather information, and a lot of it's just filtering stuff out. Again, if I'm new though, because I only have 2 minutes and then I have to go. I'm sorry, guys. If I'm new, like a few of you guys have been, I seriously pick an index fund, SPY, VU, Schwab. It doesn't really matter which one. Just pick an index fund, put your money in there consistently for a year, let it grow, let yourself get used to the ups and downs, the ebbs and flows, but watch it grow over the year. That's the best thing you can do right away for a new person, because that way you're building your psychosis for longevity. You can survive your first year, you can survive your next 100 years, but it's making sure you get through the first one and surviving red days and green days and keeping the habit. Fortunately, I do have to go.
Okay.
to get to
Thanks,
work.
Nick.
I'm really
I
sorry.
will. Can
Thanks,
you
Nick.
make a host?
Thank you.
I would recommend stay everyone. Hello, Nick. Can you?
Can I what?
Yeah, I promoted you a host. Can you promote me back as a host?
Oh, yeah. Sorry. My apologies.
So one of the
And
other
if
person is presenting about his residential land investment. If you you can join. I mean, he's going to present it couple of minutes. I think I would recommend to use the same Zoom so that you can use that. Shankar, is that
yeah,
okay? You can use the same session.
Yeah,
so
I am okay with
but
it. But yeah, I
but
need to share the link to my partners. Maybe I'll give the link to
I'll
them.
promote you this, okay? Please, since everyone is here,
so
I think you can use this. Nick will be making you a host, okay?
Okay.
Gary, I already made you host.
Oh, it's okay. I'll make Shankar to host. Okay, thank you.
and Nick,
Huh?
thank you very much. I know we held you long. Thank you.
Thanks a lot, Nick.
No problem. My pleasure. And if you guys have any questions, you guys can, contact me or chat me, and the resources that I have, feel free to share. I'm happy to share anything, especially.
Please share the book and tools that you have, whatever
Yeah,
that you
and
have.
I'll send a copy of the book to the chat as well.
You please welcome to stay if you want.
Unfortunately, I have to go to another video call.
No worries.
Yeah.
Okay.
Sorry, guys. Have a good night.
Thank you.
Thank you.
Shankar, you there? I
Yeah,
just promoted you.
yes. Yeah, I'm here. Hello, folks. How are you? How's everyone doing? Can you hear me?
Yeah, Shankar, I can hear.
Yes, we can.
Good, Shankar. Go ahead.
Hi. Yeah. Hi. Giri, one thing is, again, this is more of an very investor specific things, and yeah, recording. I'm just yeah. I